properties we're looking to acquire on the oil and gas side, we're buying production, that's our goal, or this aerospace play. We expect to be cash flowing in the next 3 months. You can't get shorter term than that, making sure that these first acquisitions take off the way they're supposed to.
Welcome back, everybody. I'm Stuart Smith, and thanks so much for joining us for another online business briefing right here at SmallCapVoice.com, where we shine a spotlight on some of the smartest and freshest plays out there in the market today. And I'm excited to be joined by Resilient Energy Incorporated. They're traded on the OTC markets under the ticker symbol RENI. We're lucky enough to be joined by the president and chief financial officer for the company, and that's Marc Pindus. Marc, how are you doing today, sir?
Doing fine. Great to be here.
Great to have you here. Thanks so much for not only making time for your existing shareholders, but also for our viewing and listening audience. And so for those not familiar with your company yet, let's talk about how the company got started, the markets you operate in, and just the foundational building blocks for your company first, please.
Well, if you went to the actual origins of the company, it would be a limited series, about 6 episodes. So let me bring you up to date a little bit. Resilient Energy came out of the old company, Three Forks Inc. And it's been around for a while. It's an energy company focused on oil and gas. Me and my partner, John Bianco, took it over, and we saw a great opportunity here to establish a platform to do acquisitions in oil and gas and make other acquisitions in complementary businesses. Setting up 2023 was basically a year we basically set up the platform, got all the players in place and everything. And 2024, we're launching. We got our symbol in the last quarter. We're trading a little bit. There's a small float in the market right now, but a lot of our supporters, both on the debt side and the equity side, we're waiting for that opportunity when we're set and ready to go. And we have some terrific backing in front of us. We have identified some major acquisitions, both in the oil and gas space and some other opportunities, which I can talk about a little bit. Being a public company, you got to be aware of the new rules involved, of course. But 2024, the first quarter, is going to be a great beginning for us, if I can say it that way. It's a new old company, and we expect to be profitable by first quarter 2025, if not sooner, quite frankly. So we have some great opportunities in front of us, and we love the opportunity.
Awesome. Well, it's a great time to speak with you then, obviously, since you're hitting
Perfect
the ground
time.
running here in 2024. So listeners, viewers, go to Resilient Energy Inc. That's INC.com. Get a little bit of the origin story behind this company. And Marc, again, thank you for that at the outset, letting us know that, hey, there's a history here, but the rubber hits the road right now here in 2024. So let's talk about your partner. You mentioned him briefly. Let's learn about the management team, but start with yourself and then tell us a little bit about your background and who else is on the team.
Most of my background is in finance and insurance advisory work. Honestly, I was with this company in particular several years ago, and actually am part of the team that took it back. So I have experience both on the finance side, insurance side, banking side, and oil and gas. My partner, John Bianco, is an investment banker by training, and he's done a lot of finance work on the energy side and other industries. So we both of us have a finance background in oil and gas, which is important. And the reason it's important is because if you look at the last boom bust cycle in oil and gas, which were the companies that went bankrupt when oil crashed? They were run by people who were just oil people, good oil people, but they were way over leveraged. So when oil came crashing down, they were caught. And that's why there was a lot of consolidation, a lot of bankruptcies and so forth. That won't happen with us. We don't mind leverage, but we have a very cautious approach to it. We understand what goes up comes down. So we're not going to expose ourselves too much in that area. So to back up a little bit, we're going to we have a conservative approach to our acquisitions on the oil and gas side, but we also want to broaden our base and have other revenue streams, not always exactly related to oil and gas, because we know the volatility of that market sometimes, and that's not good for our shareholders. So we have a broad approach to what we're doing.
That's a great point. I'm glad you brought that up. Another great point you made is how superior we are as accountants.
Mhm.
Because those who know me, and I've been doing this for 23 years, I started
Sure.
off as an accountant, then a controller, then a CFO myself. So that's outstanding. And I'm being a little bit tongue in cheek there, but really I'm not.
Well, look, oil, everyone knows when it spiked over $100 a barrel, people were borrowing money to drill at $100 a barrel based on that.
Mhm.
Then it crashed to 30. What happens if you're over leveraged? Well, the whole market crashes. We don't want to be in that position.
So let's talk a little bit. You gave us a great foundational building block of the mindset of the company right there. In terms of the types of properties that you're looking for, tell me what a resilient acquisition candidate, what are the boxes that somebody like that would check?
Oh, sure. Low cost, low maintenance. We want to go for traditional plays. We're buying production actually. Fields that could cost us anywhere from 5 million to 25 million, where there's existing production where we can get that production up by introducing new technologies, reworking some old wells, and where there's some other opportunities that were not developed on that property called proven undeveloped properties. So, if we see an opportunity where we can get a discount on a property where there's 5 wells, 15, 20 wells on there, and we can grow them to 30 wells and take the value of that property from 5 million to 25 million quickly, we like to do that. The type of properties, what I call traditional plays, would be under 7,000 feet. Vertical plays, none of this deep, tough shale plays or tight oil plays or deep water plays, that stuff, traditional stuff. And there's a lot of good properties, good opportunities out there. And in the oil and gas business, that's about the lowest risk model you can go for. There's no wildcatting. We're literally buying production. So.
Well, very good. So you talked about 24 being the prove it year, if you will, but
Yeah.
2023, there was work done. As you look back on 2023, even if it's just Q4 2023, what were some of the milestones you were able to achieve to get to where you are right now?
Getting our symbol and going public. We had a lot of things, not to be disparaging between some of the entities that we have to deal with. It was very tough getting our public symbol. And the organization responsible for that took a little bit longer than we expected, which is all I'm going to say. And that sort of held a lot of things up for us. So
I've never
2000.
heard that before, by the way. 23 years, I've never heard somebody struggling to get their ticker symbol, but go ahead. You're in
Never.
good company, Mark.
Yeah, nevertheless. So I don't want to say anything bad about those people because in the end they did right by us. But it took a long time.
Yeah.
And 2000, we should have been having this conversation about a year ago, and things took a while. Our shareholders, we had about 400 shareholders, okay, and they've been supporting us for a long time now, and they're very excited. The ones I got a chance to talk to, and they've been wanting this company to be tradable and going public, and we finally got them there. So I'm happy about that. So this is our basically 2024 is our first year. What we're really excited about is in the next week or two, we're going to have an announcement about our first acquisition, which will not be in oil and gas. It'll be in the aerospace area. It's a great opportunity, and we're very excited about this. This company will be cash flowing positive immediately, just about immediately. And that's all I want to say about it. But I really want people to pay attention to our website, which is resilientenergyinc.com. If they miss any of these other announcements or us on Twitter, they can go right to the website and they'll see the announcement within a week or two. And it's going to be very exciting, very exciting.
Well, that's great. And you brought up a good point. Hey, go ahead and give the company a like, a follow, subscribe. Go ahead and go to their website again, resilientenergyinc.com. Dateline on this is February 13th. So, within a couple of weeks, by the end of the month or early March, this news is going to come out. Aerospace, it shocks me seeing that your company is down the road from me in Houston. Is that a geographic play for you since there's just a little bit of aerospace there in Houston?
Well, we're a national company.
Okay.
If you can see behind me, I'm actually in Connecticut. The snow through the window there. We got a little snowstorm today. Our
Right.
headquarters is actually in Houston,
Okay.
and this aerospace company is going to be in Florida ultimately.
Okay.
It's in the process of moving over there. Oil and gas properties we're looking at right now are in a lot of different states, Texas being one of them. Okay, but we are headquartered in Texas, and I'm gonna be on a lot of airplanes over the next few years. So
See
that's
that
all.
in your future. Well, let's talk a little bit about that then. So you've foreshadowed a big play for your company
Yes.
in another vertical, which that's exciting. Operationally speaking, and again, as the CFO, what are some benchmarks or milestones or operational goals that you'd like to see the company achieve this year in 2024?
Well, we are not going to be taking any positions in any ventures that are not going to be profitable in 3 or 4 years. So naturally, that means we want to make sure our first acquisitions are cash positive or will be almost immediately. And I think we're in the properties we're looking to acquire on the oil and gas side. If you remember, I said we're buying production. That's our goal, or this aerospace play. We expect to be cash flowing immediately. And our goal is to really, in the next 3 months, if you can't get shorter term than that, making sure that these first acquisitions take off the way they're supposed to. So that's where we're at.
Well, very good. And I want to give out a headline and a dateline here. Dateline February 1st, 2024. RENI CEO unveils fiscal year 2024 acquisition strategy focused on energy and technology sectors. It's a great read, a great way to get to know this company a little bit better, as is this interview with the company president and CFO, Marc Pindus.
Now, here's the thing. Here's one thing I will add. I like to underpromise and overdeliver as a rule. So when I make that goal that we're going to be profitable in first quarter 2025, my personal goal is to try to cut that down by half, just so you know.
Hey, exciting. Another tidbit from Marc. Hey, Marc, I want to thank you so much for your time, your insight, your sense of humor working with a guy like me in this interview. Thanks so much. I look forward to speaking with you again as more great news about your company hits that press wire.
Anytime, and thanks for having me.
Absolutely. For Marc Pindus, this is Stuart Smith saying thanks so much for tuning in. And don't forget to smash that subscribe button, hit the like button, and give us your comments on the interview today. We'll pass them right along to the company, and we'll invite them back here in the near future in 2024. For Marc Pindus, this is Stuart Smith saying thanks so much for tuning in.